fantastic period for you. I mean, as I mentioned, we've got headline earnings per share up 14% or so. Looking at your NWJ stores, fascinating that you've amalgamated food and jewelry in the same space. Tell us a little bit about this, because some analysts out there are viewing this sort of as your cash cow, so to speak.
Yeah, you know, we've stopped trying to convince people that jewelry and food are the same thing. They're clearly not, but we think that the businesses work well together. We can add value to both of them. So, you know, within the taste structure, they seem to work well together.
With regards to where to next, because we know that Foschini is basically your biggest competitor within the space, and when you just look at what you basically said within your results, you're now the third largest jewelry chain store in the country at this point.
You know, it's something we were aiming for when we bought NWJ. We thought that it's got a lot of very unique characteristics about it. We're the only chain that manufactures as well as owns stores in the front end, so we're completely vertically integrated. And we're also the only franchise chain. So we think that gives us some quite unique advantages over some of our competitors.
With regards to your pizza space, I mean, obviously a very competitive environment, so to speak, at this point in time. How are you going to manage ensuring that your margins are kept intact going forward? And of course, input costs are going to change quite dramatically in the country. We know electricity costs, and of course, with regards to fuel increases, that could have a very big impact on your profits going forward. How are you going to mitigate these issues?
You know, in that, there's always something, somehow or another. So whether it's fuel that was $140 some time ago, we had to deal with that, and we did. Yeah. Electricity increases, similarly, we had a program in place for the last 2 years almost around the electricity increases. So, you know, that's sort of, I suppose what we do every day. But yeah, certainly margins are getting a bit tighter, which is part of why we want to vertically integrate that division, so that we can better manage the costs within it and pass those on to franchisees, as well as retain some for ourselves.
With regards to the company evolving into perhaps something that most investors are saying an early stage famous brands, would you compare yourselves to famous brands at this point in time?
Look, in terms of the business model, we're pretty similar, because certainly what we're working towards in our food division will be very similar to what they have. So, you know, a comparison along business model lines is not an unfair one. We're certainly a lot smaller than them at the moment.
On the acquisition path going forward?
Certainly acquisition is part of our growth strategy. It has always been. That's why we listed in 2006. So we're certainly looking at opportunities, and hence our reasonably conservative dividend cover this year.
Tell us a little bit about your sauce and spice manufacturing facility and what your plans are going forward there.
Well, we've got a facility in Cape Town. We manufacture sauces and spices, and it's a HACCP-approved facility, which gives us quite a competitive advantage, particularly in respect of the Consumer Protection Act and the traceability of products. So in last year's numbers, there's none of the production for scooters or maxis in there. So in the coming year, certainly we can see that revenue that we had, even though it grew quite a lot in the manufacturing division, we're certainly going to get to levels where it'll double quite quickly, just as we start providing sauces and spices into the pizza and into scooters and into the maxis.